Richard Harris, Chief Executive at Port Shelter Investment Management, who's joining us today. Richard, great to speak with you. I'm going to start, we'll come to Iran, Israel in just a second, but I'm going to start from, on your view on what's happening in Indian markets and how Indian markets are now being seen, especially considering that China is resurgent. And pull up the Hang Seng and the Shanghai Index right now. We just saw a huge spike up over there. Is a resurgent China going to attract much more flows at the cost of India?
Well, I think what we're seeing, yes, indeed, China is a competitor in some ways for foreign investors allocating their money. And they probably thought, well, it's probably an easy hit to sell a little bit out of India, put it into China. Clearly, the Chinese market is on a tear at the moment. What's made it more complicated is, of course, these announcements were all done just before the start of Golden Week. So the market was open on Monday, and it hasn't opened since in China. We're seeing a little bit of a window on China, if you like, through the Hong Kong market, which has been open. It was only closed for one day on Tuesday. And that's continued to go up, although in the last day or so, it hasn't gone up quite as much. So we've seen this big move in China. It is in reaction to some very positive policy moves. And I think because people have been so underweight in China, they are looking to scrabble in to get at least some stocks in before the market opened on next Monday.
In terms of what Biden's commentary is, and that's the headline everywhere, Richard. If you look at the quote of what Biden actually says, and he was asked, will the US back any action by Israel on Iran? And he says, we're talking about it, well, and then he just sort of walks off. That's being seen as US backing Israel. That'll probably happen. How worried are you about how big that situation could blow up to? And then what's the worst case scenario there in terms of impact on global markets across all classes?
Well, we have seen this movie before. Of course, Iran launched a very large attack against Israel just a few months ago, and Israel replied in a fairly modest manner. Now, the concern is that maybe Israel will respond much more seriously, but even then, you're probably looking at targeted attacks on military or semi-military installations. So once again, it seems difficult to see that Israel can launch really an all-out war against Iran. And indeed, it's quite difficult for Iran to continue with these attacks. They're firing lethal weapons over other people's countries for a start. So the whole thing is still restricted by those criteria. Biden clearly misspoke. He probably should have said nothing. Of course, America is going to try and stop Israel from launching a major attack against Iran. After all, they said last time, take the win. And Israel has had quite a lot of wins recently. So my guess is that there may be a muted attack, or it may be slightly larger than it was previously. But we've seen the movie before, and it didn't really move the needle in terms of world markets.
Richard, hi. It's also Samina joining in. Now, let's talk about actionables, right? We've had a very solid 2024. Markets globally have been on a roll. The S&P 500, the Nifty, Japan have all eked out very sharp gains. Do you think it's now time to take profits off the table? And for the next quarter, maybe we could see a risk-off trade for global equities?
Well, who would have thought that 2024 would turn out as well as it did? We've seen some spectacular moves in many markets, or almost up 25%. That doesn't happen all the time, every year. We saw really in the US a big move because of the AI bubble, and that's come through, and that's been pretty well priced in the market, although, as we saw the other day, there's still money going into AI with the fundraising from OpenAI. Which was spectacular. And in China, it's been slightly different. The economy has been very weak. The market's been very slow, and the authorities look as if they're now going to try and reflate the market. They promised to do so. If they can't carry on, things will be worse. So pretty well, they have to continue to reflate the market. So we've seen these big moves on two different reasons. It does seem difficult on a longer term view to see this happening again in 2025. The big moves this year, we've gone up maybe 25%. It's quite feasible that the markets could come back a third. But at the moment, the fundamentals still seem to be strong enough, strong employment in most parts of the world. Economy is not doing too badly in most parts of the world. Those fundamentals are still strong enough to really make one think that, yeah, we may lose a third of what we've seen this year, but that would be normal in line with what you'd expect in markets.
Richard, let's leave China aside and let's talk about India in isolation. I think the biggest complaint for foreign investors has been that Indian equity is expensive. But historically, India has been an expensive market. With the resurgence of China, with higher crude prices, and not a very strong earnings season, and also the fact that portfolios have made money in India, do you feel like with India in particular, you would look to take something off the table and allocate to debt, or does India still look attractive and at every 5 to 10% correction, potential inflows could start picking up again?
I think that the latter is more likely. As a foreign investor, I think India still looks interesting. There's still a great deal of growth. The government isn't really as involved in the economy in India as it is in China, so the growth can continue to go quite organically. So I think that, there are strong reasons still to be in India. The economy hasn't really changed. It's still doing quite well. In China, the economy hasn't really changed. It's not doing particularly well. But what we are seeing is stimulus in China that you just don't need in India. And equally, these things have been a swings and roundabouts. India's had a great year this year. There may be some money taken out of India to go into China, but I would still not be underweight in India.
Very lastly, Richard, moving away from equities, are you buying into crude and are you buying into metals for the short term? I know sticky money may not come into these two asset classes until there's a significant demand-led recovery that countries like China witness. But if you were to go long, would metals and crude be a good space to go long on? And also gold, let's throw that in, given the rising stress on the geopolitical front.
Well, gold's had a great run. It does tend to move in batches, very lumpy, and it's had a great move recently. So I think maybe we're coming to the end of that period of outperformance. Other commodities, I don't really see a big pickup. The Chinese economy is going to take a while to pick up. We've seen prices move really in anticipation of a Chinese economy perhaps in 6 to 9 months' time. So once again, we've seen those prices move. The news is in the markets. It seems difficult to imagine there's going to be much more going forward. Oil, of course, has been a bit more of a conundrum because of the crisis that we've seen in the Middle East. And the big swing producer, Saudi Arabia, has said that they want to increase market share, which means putting more oil on the market. So I think that there will be a cap on the oil price for now. That'll obviously be good for India and China in terms of their economic growth. I can't see oil going to 100 unless we do see a severe supply crisis in the Middle East, which at the moment is a risk, but it's not a clear one.
Right. Thank you, Richard. Great talking to you this morning. It seems like...
Great weekend.
You too.